here are some solutions for homeowners in foreclosure. The number one easiest thing that you can do is you can list it with a real estate agent and have them sell the house traditionally, maybe get some equity out, or bare minimum, just break even. That's gonna be the easiest thing to do. However, you might not have enough time to get that done, so you might need to have them list with a savvy realtor who knows how to postpone the auction for them to give you more than enough time to be able to pull this off. One thing to keep in mind, in order to postpone the foreclosure auction, you actually need an accepted purchase contract. So if that's your only option, you might have a hard time. The second option is to accept a cash offer, and that's gonna come from either a wholesaler or a local investor. The good news about this is that you can close really quick, and if they have enough equity, they can even make out with some money. This will allow them to avoid the foreclosure auction altogether and make some money in the process. The third option is a loan modification. The problem with that is qualifying for a loan modification is a lot like qualifying for the mortgage itself. So, a lot of people that find themselves in this situation have exhausted all of their other options thinking about the short term. So if they can't even afford their home payments, likely they're falling behind on their HOA, they might be falling behind on their car payment, they might have lost a job, had sickness, had someone pass away in their family, and so they might not even qualify for a loan mod at all. And so it's a good thing to suggest, but it just might not be in the cards for them, and you might waste the entire time leading up to the auction working on getting them qualified for that, only for them to be told no at the last minute with very little options left over in that short amount of time. The next thing that they can do is they can reinstate their loan. Now, this is ideal for the homeowner. They don't have to move, they can stay. However, they have to catch it up in full, meaning they have to pay back all of those back payments, which at this point they've probably missed more than 3, all of the late fees, and all the attorney and trustee sale fees that are also tacked on. So it is a huge amount of money. And so in order to reinstate the loan, you have to come up with that entire lump sum in cash and pay it up front in order to put the loan back current, reset the time, and kind of make it the way it was. That is really awesome, but for a lot of homeowners, that's kind of a pie in the sky type of thing that really isn't possible. A lot of people already have gone to any friends or family members, have tried to get personal loans, have done what they could to make sure that they didn't end up in this place at all. And now that they are, having someone that can loan them that much money, or they just randomly have that much money in savings, is probably really unlikely. The next thing that you can do is get creative. When you do creative finance, you can have whoever is purchasing the home reinstate the loan and leave the underlying in place and take it subject to, and that could be really appealing for your end buyer and great for the seller, as they can still get some of their equity in cash at closing. Another really obvious solution is to do a short sale. A short sale is when the seller will sell the home for less than what they owe. This is an excellent solution when your homeowner is underwater. One thing to remember is that if you have not done one before, please don't attempt a short sale on your own. This is something that people specialize in, and it takes a lot of negotiation to be able to pull it off successfully. Once you have your approval letter from the lender saying they will allow you to complete a short sale, you have to be really careful that you also make sure that the lender can't come after the homeowner for a deficiency judgment, and a few other key things that you really need the experience or to partner with someone who has the experience to be able to pull it off properly. The second to last option for the homeowner is that they can do what's called a deed in lieu of foreclosure. That's exactly what it sounds like. They take the deed to the house, so the ownership paper, and they give it back to the bank in order to avoid the foreclosure auction. This is a good option. However, as you can see, there are ways that the homeowner can actually sell the house and make some money, or sell the house and break even. There are a lot of other things that we can do to help them before we end up at this point. And finally, the worst thing that should ever happen to the homeowner is that the house actually goes into the foreclosure auction. Now, this must be a human nature thing, because this comes up all the time and it comes up all over the country. A lot of people that are in this situation are embarrassed and they're ashamed. They think that they have more time than they do. And a lot of times they will be like an ostrich with their head in the sand, and they will wait until the last possible minute before they start asking us for our help. The problem with that is at that point, the amount of solutions that we can offer them are very few. if it ends up going to foreclosure, one thing that a lot of people don't know is that the lender can actually put a judgment on that seller's credit for the amount due versus what was owed. That difference, they can put a deficiency judgment automatically on that seller's credit without much notice, and the seller can't do anything about it. So not only did they lose their house, not only can they not buy a home for another 7 years, there are some tweaks to that, but rule of thumb, they're gonna have to wait 7 years until they can become homeowners again, but they also can end up with this massive deficiency judgment that they can't do anything about other than file bankruptcy. Arm yourself with a few of these solutions, partner up or know of people you can refer the sellers to if you are not familiar with things like short sales or loan modifications, but you want to actually get these people into your office or sit down with them at their kitchen table just like this and actually hear their situation, understand what they owe, what the house is worth, how they ended up here. That can really help you pick the best option out of these for them. And you might have to try a few before you find one that works. But as long as you know what's available to them, you should feel really confident in getting out there and meeting these people and starting to help them out.